Hello and welcome to part two and the final part for today's video. And at 11 a.m. Eastern Time, I was stating the extra volatile movements and how weird it is that this is all starting at 10 o'clock. Because usually this goes on from about 6 to 10, and then things not only lighten up, but usually get bullish after, well, it's usually bearish from 6 to 10. However, that hasn't been the case. And since this period has come into play, the market had a bullish move up to this level, but obviously didn't hold, didn't find support at the 1 day moving average, which was also this previous resistance level. Rather, it kept going lower, failed to find support at the 5 day moving average. We can see that it's been resistance at the 1 to 2 o'clock figure. This can cause headaches for day traders because the market is now moving into an indecisive mode, looking like it's going to go bearish, no, looking like it's going to go bullish, no. Therefore, you can call it neutral. However, when you have a rising 5 day moving average, all sell-offs are guilty until proven innocent. It hasn't been proved innocent yet because you need to see this 5 day moving average flatten and go lower. If this is the case, then this would start an intermediate term bear market, and this one would be very short because all it could handle was only short-term support levels. That doesn't mean that's going to be the case. You got this big level here, this Fibonacci from located from this high and this low, and thus, as long as it stays above this level here, it will not go to that of a bearish state. The volatility is increasing, but still not as big as we're accustomed to. The biggest move was in here. That was about 1.7%. When we were looking at the previous volatility, the average for an hour was 2%. So the biggest is below the average. It is, however, bouncing from this 0.5% mark. And if the market continues to sell off, then we'll probably break above this. Still, I'm not convinced that it's going to happen, but obviously, if you're aware of how the markets go up and down, if we happen to have another leg lower, it also would not be the biggest of surprises either because it still hasn't managed to get above this significant level. But what's important with this level is you found resistance here, which was pretty expected because it was a decent amount of time since you had last touched it, and it was a decent sized correction to the downside. Thus, you found the higher low and a decent sized higher low, which is pretty cool. And now you're up to this area again, so that increases the chances that it's going to be taken out. But if you don't take it out when the chances are higher, then that could be very cautious. Now, it can still make a higher low. It's finding a support at this level of resistance, so that's all fine and dandy. And it could even make a higher low and towards here. Even for that matter, a double this bottom here, but if it breaks through this support level, roughly around 36 and a dime, 36.12, then that would create a double top formation. And a good reason why double tops work so well is because when you're here the second time, you're supposed to take it out. And as I stated, if it comes with a higher low, then the double top formation would never even come into play. So that's something to keep your eyes on. Again, you got this big support level here, roughly around 35 or so. And that's the massive, massive level where the break below here could be fast because the market is not showing much resilience in getting above it. We have yet to have had a touch of the 50-day moving average since in here, but this is a small pierce below. Market overall very indecisive, but then again, you look at why the market's moving this way, how it's done, that's not a big surprise either. Take care.